watching Stockwatch. I'm Simon Brown. Joining me to unpack your stock-related questions today, Chantal, Marx, FNB Wealth and Investment, Ricus Reeders, PSG Hole in One, Ruimsig. Be sure to send your questions. Email stockwatch@bdtv.co.za. SMS 41392 or on Twitter @BusinessDayTV using hashtag Stockwatch. Chantal, Ricus, appreciate the time today. We've got a lot of results, but before we do, we also got a listing today. Is it Greencoat Renewables? Chantal, you must have had a squiz at this. I quite like it. Nice looking dividend yield. Your thought on it?
Yes, I also like it. I think it's something very different for the South African market. We don't really have anything similar to it. It's asset-based, the cash flows are quite predictable, and the dividend yield is very high. And what we're getting today is actually the benefit of a broader de-rating in the renewables sector in Europe over the last few months. So we're getting the stock at a 30% discount to net asset value as well, which I think is a pretty decent entry point. And as you mentioned, very attractive dividend yield. I think it's about 9.5% at the moment.
Yeah, 9.5 euros or sterling. I forget what its primary currency is. Ricus, is this one you've had a look at and have thought on?
Not at all. I must admit, news to me. I saw the name flipping past this morning, and I thought, well, I've got to go and take a look at this. If it's well, maybe just a bit of colour to that. I was reading the Financial Times this morning. The interest all of a sudden is something called blue bonds, which is also based on renewable energy, but that sector of the market has been surging because what it does is, it works like a bond, but the proviso is if we borrow you money, you've got to go and invest it in as called blue. In other words, in things which will benefit the ocean or water resources. So it's certainly, again, despite pushback from various, shall we say, business sectors globally, renewables and looking after conservation still is a growth market as far as I'm concerned.
Yeah, no, concrete. I mean, there has been pushback, but I take your point. I'm getting two shades codes for it, but the shade code I've got is GRP, Greencoat Renewables. It's PLC, so I suppose we're getting paid in sterling. That's right. It's listed on AIM and around a 9% dividend yield. Ricus, let's stay with you. Omnia results site. Chemicals, poor, no surprise. Special dividend coming through. Mining, very strong. Agri kind of going sideways. Your take on Omnia results and on the investment case for it, or lack thereof?
I just wish they would settle this SARS business because it is overhanging the share price, I think. But as far as the operations are concerned, I was comparing it with ACI a while ago, and whereas ACI still has a lot of reorganization to do, Omnia has done that and doing pretty well. I mean, the one thing that remain is the chemicals business, which they're incorporating the best parts back into their operation. Their water business is for sale. And I thought it was, under the circumstances, a good operational result. But as I've said, I would just like that tax story with SARS, which is almost a billion rand, I think, for that to go away. But you can't fault the operational performance.
Yeah, and I think the CFO in the results presentation was talking about if they lose a potential appeal. Chantal, this is a company that did a giant rights offer back in 2020 at sub 20 rand. If you had followed your rights, you've got your money back plus a whole lot more. You're taking the business and the results.
Yeah, so I thought it was a pretty decent result. I mean, the main focus now is on mining and agriculture, which they still believe is to be strong growth sectors. And I think that in the broader African context and in the global context, both of these sectors are thematically very well supported, right? We need to mine critical minerals and materials in order to push through this kind of renewable transition along with technological advancements. And on the agriculture side, food security is something that's in focus globally and in South Africa alike. So I think that the areas or the industries to which they're exposed are longer term growth industries. Their restructuring, I think, was a masterstroke in how it was executed. The balance sheet is really strong. Cash flow generation looks very, very solid. So from that perspective, I really like the company. I would like also for the SARS thing to be behind them, even if it's an adverse outcome.
Yeah.
At least then we know what's going to happen going forward, and then you can reassess the business case and the investment case thereafter. But an overhang like this will keep the company's valuation contained. So I would love to see the back of that as well.
Actually, I like your point. Whichever way it goes, just get it gone. Even if it's against you, just make it be gone. Chantal, let's stay with you. Oceana results side. I always like fish stocks. Fortunately, I never buy them because I would lose money. And they had the problem that Peru is back online, but be that as it may, your take on the Oceana, the results, the sector generally. I mean, we've got a couple in the seafood space. As I say, intuitively, I like the idea, but I don't know if we make money here.
So it's very cyclical, right? It's very similar to the poultry industry. So you have to trade it rather than think about it as a very long-term investment. I think over time, the share price will move higher if it's a quality operation and they're generally cash generative through the cycle. But it's a really nice trading stock rather than a long-term investment holding. So for Oceana, I think we've just seen a normalization in fish and fish meal prices, particularly in the US, and that has had a negative impact, particularly in this specific reporting period. I would expect things to look better because the base is less demanding in the second half, and then we've got a normalized supply scenario, so you should be able to get a better sense of how the company is faring overall from next year onwards. What I would say, though, is Lucky Star really stood out to me.
Yeah.
I think that they're doing amazing work with that business, and I think that the investments that they've made in improving their operational efficiency and making their manufacturing process more high tech is starting to pay off in terms of margin expansion. And I'm excited, particularly for that portion of the business. I also think it's way less cyclical than the actual fishing part of it.
Yeah, no, that's fair. We're gonna have our tin of fish on a much more regular basis. Ricus, are you interested in fish?
I think it's a bit too cyclical for me, as Chantal just said. What I like about the business, and I agree with Chantal, is the fact that they've moved away from having to go and search for where the fish are to something which is more dependable as far as product is concerned. But fishing still is a difficult business. I mean, at least with a chicken, you know where to go and catch the thing, whereas if you've got to send your trawler further into the ocean to go and hunt, you know, your operating expenses just goes through the roof. So it's a lovely trading stock, but it's not something that I would ever invest in.
Yeah, okay. And I'm going to hold that one. You always know where your chicken is. Ricus, let's stay with you. Supergroup, of course, we got the special dividend from their sale of the Aussie asset recently. Question coming through is there value in what is left of the rump? Ricus, Supergroup for you?
It's not something I'm really taking a look at the moment. I think what's left is probably well run, but I can't see any huge revenue growth coming out of the company. So the only thing they can do is to manage their operations better, which would obviously have an effect on the share price if earnings follow along. But is it a growth sector locally? I'm not so sure. You know, the interesting thing was always the Aussie business, which is now not there anymore. So could be completely wrong on this, but yeah, I'd rather be in a market environment where there's growth rather than just managing your costs.
I agree, take your point on that. Chantal, for you, Supergroup, is there good growth prospect here, or?
Yeah, I mean, I think in terms of what is left, you're very exposed to the South African economic growth story. So I think from a logistics and fleet management point of view, if the growth isn't there, the growth isn't going to be there on the revenue line. I think the dealerships is an area that excites me at the moment. We just saw new vehicle sales coming out, and it looks quite solid. So I actually, that's a portion of the business that I really like. I think in the UK it'll probably be a little bit more challenging, but at least from a local perspective, that makes sense to me. It is super cheap. So if you're a deep value investor, this could be one for you, but you could sit around for a while and wait for that re-rating to come through. It certainly wasn't coming through through when SG Fleet was still in it, because the rump was kind of hidden in the valuation for SG Fleet. So perhaps that visibility could result in a bit of an unlock.
Yeah, absolutely. It was kind of hidden there. Chantal, staying with you. In fact, I've got two questions. African Rainbow Investments delisted. I elected to hold the shares. How do I sell them? And someone else is saying, how do I buy them? Chantal, I don't know if you have any deep insight beyond, I suppose, head to their website and speak to the company secretary.
Yeah, so I mean, your unlisted shares are still your shares, so you'll be able to sell them. I would reach out to investor relations unless you have a broker that can perhaps help you with that. Some full-service stockbrokers will be able to also help you deload those shares and perhaps find a market for it. But it certainly does complicate matters. I think just as a general rule, once you have a company in your portfolio that has had a general meeting and the decision has been made that they are going to delist, elect to sell it. You're just complicating your life unnecessarily. Liquidity is very strained. You'll have wide spreads that you'll need to contend with. But yeah, there are ways to sell.
Yeah, and at least in this case, we can expect the board of African Rainbow to be honest doers. That's not always the case. There's some delisted stocks which you do not want to be holding on to in the very least. Chantal, staying with you, Copper 360, question coming through. The stock with the most unfortunate share code, CPR. Question, is there any value here? It's Copper 360. It's a tiny little stock. Do you follow it?
Yes, I mean, I followed it. I looked at it very carefully prior to the listing, and I really liked the story. I think that they put forward a really positive story in terms of kind of rejigging those copper mines in the Northern Cape, bringing them online, and also pushing through the manufacturing, or not the manufacturing, but the refining capability as well. Unfortunately, with these kind of junior miners, there are always hiccups when it comes to bringing your facilities online or bringing your new mine online, ramping up production, and they're going through a period of hiccups right now. So the net effect is that you don't really have much revenue coming through, and you've got your costs ballooning. So I think near term, I'm still a little bit circumspect around it. But I think if they can get any of it right, they'll be doing exceptionally well. They're exposed to a metal that we really like. It's a metal of the future. And I think that there'll be great demand for their product going forward, and price support for copper over the very long term.
Ricus, do you have any further insight into Copper 360?
Yeah, I think first let's talk mining. There's not a lot you can be certain about in mining, except for one thing, that any project is probably going to be over budget and not completed in time.
Yeah.
And I think that's, and it's normally, that's just the essence of the business. And as Chantal said, if they can get this thing going, and they start generating revenue, then you've got a working mine in a metal that is sought after at the moment. But if you are a shareholder, be aware that while there are difficulties, they will need money from somewhere, where they go and borrow it from somewhere, or have a rights issue, or something like that. So you have to have faith in management, first of all, to get this thing off the ground, and then hope that by the time they start producing and start earning an income, that whatever they are producing is at a price that makes it profitable.
Yeah, but I like your point. Junior miners expected to take longer and cost more. That is just the one certainty that we absolutely have. Staying with you, Ricus, we had the PPC numbers out today. I had a quick look at them. A lot of moving parts there. Of course, they're upgrading those Western Cape plants. That's still going to take a bit of time. Your take on PPC, your take on the sector. Of course, we've got Afrimat now big into that with Lafarge. PPC for you, Ricus?
I think the sector first, and we were talking about Afrimat, and it's not a sector that excites me. Can I say it's like Supergroup? We do need an economy locally that's growing for these companies to be able to compete not only against each other, but against cheap Chinese imports, for example. That being said, PPC is well on its way as a turnaround story compared to where they were two or 3 years ago. So kudos for them, and people are positive about the share price. It's pushing to 52-week highs. So to me, it's still a bit of a cyclical trading type of stock, and I wouldn't necessarily invest in it. But as long as they get operationally more efficient, that will show through in its earnings and will lead to further readjustment in that price.
Yeah, and it's certainly, to your point, I mean, we've seen a couple of turnarounds working on the JSE recently, Nampak another, but of course, usually they take longer and often don't work. Chantal, PPC for you?
Yeah, I must say it's actually really nice to look at some of these companies that were in deep trouble a few years ago, and they actually have they're net cash positions. And even though there's still strain on the top line and volumes, they are doing everything they can to make their operations more efficient. And PPC is another example of that. They've simplified everything. They've sold out of the African businesses. They really are quite focused on what they need to do going forward. And what I would say for the kind of the cement and construction material space over the likes of a super group and so on is that when you are thinking about what's going to drive economic growth in South Africa, you're probably going to start with gross fixed capital formation. You're going to start with shovels and picks, and that requires these inputs. So if we can get this infrastructure program rolling, that's what's going to drive longer term growth. It'll probably reach the tertiary sector a couple of years later, but your first point of growth is going to be in this space. And I think if we've got a local sourcing component to this infrastructure drive as well, it could benefit the likes of an Afrimat and a PPC kind of in an outsized manner. So I think that the chances of seeing growth there first is higher. That said, it is very cyclical. There's a lot of moving parts. We've had several delays to this infrastructure story. So approach with caution. But I do see the longer term investment case here.
Yeah, absolutely. And I was actually zooming out in the show. I'd forgotten all the shenanigans of 2014, Ketso Gordon, and we won't go down that road. Chantal, staying with you, question coming through. Platinum, palladium, finally looking good on the charts. What is your preferred PGM miner on the JSE? Chantal, which would be your preferred PGM miner?
I think my preferred PGM miner at the moment is Anglo American Platinum. I think the re-rating relative to the rest of the sector is incomplete. We still have a lot of moving parts with the listing in London and then bundling from Anglo American. But in terms of quality and the assets that they have, I think that Amplats is probably the best positioned. That said, it's not a marginal operator by any stretch of the imagination. They're still making cash. Or still printing cash, even at very low PGM prices, they are generating some cash flow, and they're also not highly leveraged. What this means is that if you get a very big and quick spike in PGM prices, which is something that we've seen recently, and if that is sustained, Amplats could lag to a certain extent because they're not that highly leveraged. So if we're going to talk about the current rally, the stock that will move the most is Sibanye-Stillwater. But that doesn't make it the best long-term investment. I think the best long-term investment is Amplats.
Yeah, 100% get your point. They're the sort of, as you say, the more profitable, the more resilient, and therefore perhaps a little lazier, but that's not always a bad thing. Ricus, what would be your preferred PGM miner?
Yeah, I agree with Chantal that Amplats is the safest. Obviously, also benefiting from the restructuring. The management can now focus on their own operations rather than being part of the Anglo stable. But if you want to have price outperformance, yeah, Sibanye is the one that will rally the most. Unfortunately, also the one that's going to fall the most if you are wrong, or if we have a sudden drop in the PGM metals prices. So I'm playing it sort of safe in the middle by either Impalas, which I think is a little bit more risky considering their Zim operations, but also there lies your future, or Northern, which I think is well reserved, or good reserves, and technically, plant-wise, probably the better option amongst the three.
Question coming through about Mr. Price. I like the Friday results. Second half showed stronger numbers, and then today everyone woke up and chose violence. Why is it down 4%? Should I worry? Ricus, your take on Mr. Price? It has been sold off aggressively today. Is this a panic or just a market move?
I think part of it is the market. I mean, it's not only Mr. Price, but a whole bunch of retail shares are underperforming today, so that adds to it. Yeah, I thought the results were decent, possibly not good enough for the market, but nothing that says, well, it should be 40% down today, as far as I'm concerned. I mean, it's not hugely expensive even on a historic price earnings. Possibly the market just expected better.
Chantal, your take on Mr. Price? As I say, the market shows violence today. I suppose that happens sometimes in a stock market. Your thoughts on Mr. Price?
Yeah, I mean, as Ricus said, I mean, there's been a broader sell-off on the SAX side and on the retailers in particular, the discretionary retailers. So perhaps just a bit of profit taking there. I don't think it's anything specific to the Mr. Price results. It was kind of middle of the road. Revenue was better than expected, earnings a slight miss, but I think I took comfort in the fact that momentum seems to be moving in the right direction. We had much better second half sales and profitability, and in their throw forward statement, they also mentioned a further acceleration in sales. I like the fact that that credit sales are increasing, but at a slower rate than cash sales, but they're increasing, and the book quality is actually improving, which tells me that credit sales growth is actually sustainable. So that could also support them over the next few months. The environment is improving, even though it doesn't feel great. Inflation is very low. Interest rates, we just received another cut. We're probably going to get another cut later this year. And it seems as if these guys are managing their portfolio very well, and delivering on gaining market share, on expanding their store base. So, yeah, I'm still a happy long-term holder. I think this was probably just a bit of profit taking.
Yeah, and quickly before we go to stock picks, I mean, Foschini Group, TFG, also a good H2. To your point, the consumer's in a better space than we were a year ago. It's relative, but it's better.
Yeah, absolutely. I mean, and TFG's results looked very similar to Mr. Price's. Yeah. I mean, all the kind of growth areas, the momentum gain in the second half, carrying through into the new financial year, the increase in credit application approvals, but the improvement of the book, all of that looked exactly the same to me. I think what complicates things for TFG is the exposure to Australia and the UK, where things are still a little bit bumpy. But yeah, I mean, that's also a stock I like longer term. It also doesn't look expensive, and perhaps also today a victim of some profit taking. Yeah,
a victim. We'll take that. They are victims. It's not their fault. Let's go to some stock picks. Ricus, Medtronic.
Yeah, as I said, I was looking for a local listing, but I really couldn't find one, except for Platinum. Medtronic listed in the US. They make medical devices, have been doing it for years. Things like machines to help your heart going along and stuff like that. However, first of all, shall I say, long distance surgery, where they employ AI to help your surgeon while he is working via video link, and the other one is Cetera, which is basically an AI-driven research engine where you would normally use animals for testing. You're now using AI to help with your testing. I think it's two huge growth areas. The company has got a terrific dividend growth record of more than 40 years. Yeah, I think it's an exciting sector, and they're one of the leaders in that sector.
Founded in 1949, which blows my mind. I can't imagine what they were doing back then. Chantal, Bidvest.
Yeah, so I mean, I was also scratching around locally and struggling to find anything. So I decided to go for the company that owns almost everything, and that is Bidvest. I think as we mentioned around the retail stocks as well, it does feel as if the consumer environment is continuing to improve, and I think that Bidvest will be a beneficiary in their consumer business. I'm excited about the motor retail side that business and most other businesses at this point in time who are exposed to it. So I think they could see a really nice uplift in their automotive business. And yeah, I mean, it's well diversified. It doesn't look expensive at all. The CEO bought 10 million rands worth of shares towards the end of last week. Oh, yeah. So who am I to disagree with her?
Yeah, no, fair point. 10 million, not a small change. We'll leave it there. That's all for Stockwatch today. Thanks to our guests, Chantal, Marx, FNB Wealth and Investments, going with Bidvest, Ricus Reeders, PSG Hole in One, Ruimsig, going with Medtronic. Up next, the close. Stay watching.